Hello and welcome back to the channel. Today we're gonna have a quick look at a little history lesson, and don't worry, at the end of the video I will explain to you why this is important. But we have to go down the memory lane. We have to go down in time to when this guy was born in 1851. His name was Charles Henry Dow, and you might know his name because today we know the Dow Jones Index, the Dow Jones Industrial, Dow Jones Transportation Index, and so on and so forth. He was a very influential journalist at the time. You can see here he was 51 years old. And he founded the Wall Street Journal as well, which has become one of the, as it says here, most respected financial publications in the world. So what he also did was that he invented a way of looking at the market. I'm not really sure that he invented it, but he structured it in a way. And as it says here, that later became what is known as the Dow theory. Now, the Dow theory is where we're looking at tops and bottoms in the market, and there is a whole body of the theory about that. But overall, when we look at a trend today and we're looking at higher highs and higher lows, that was a concept that was that was started out by Charles Dow, at least in the way it is described today. Now, he started out this Dow Jones index. In the beginning, it was actually a railroad index. We can see here, when we scroll down here, that it was basically in the beginning 11 stocks, whereof 9 of them were railroads. This tells us a bit about what was big in the late 1880s, 90s, where rail was revolutionizing the world. If it had been today, it would be something else, AI or whatever. But at this point, what really rocked the world was railroads. And millionaires and billionaires were made in that. He later changed it on a couple of times. It ended out as 20 active stocks, which were actually at the end all railroad stocks. And in the 1970, I think it was, the name was changed to the Dow Jones Transportation Index. So that was a bit of history. But what Charles Dow actually said was, and now we're looking at Dow Jones Industrial Index as it is today. It's not the most popular index today, but we can see that the constituents of the index are all of these giga caps. It's 3M, Amazon, American Express, and so on. Caterpillar, Chevron, Coca-Cola, Goldman Sachs, McDonald's. All of these, not maybe as sexy stocks, but they are very solid, they're very large, and it is an index that we are counting on. So what Dow said was, and he primarily looked at a weekly chart, was that an uptrend was created when a new higher high was created. For instance, here, we can also see here, new higher highs, and then we had to form a new higher low as well, meaning that we have broken a lower low here. So that would be some sort of mix up here. We wouldn't really be sure if this was a trend or not. We would know that around here and here. And what he said was that the overall index, of course, was important. However, what he also said was that if a trend were changing in the Dow Jones Industrial Index, it had to be confirmed by another index, and that was the Dow Jones Transportation Index. Maybe you don't know of that. It's not very well known among retail traders. But as you can see here, the Dow Jones, and it is DJT. It's not the Donald J. Trump Truth Social stock. This is the Dow Jones Transportation Index. And as you can see here, we have the Union Pacific, we have Uber, we have UPS, FedEx, all the transportation, logistics. We have some Alaska Air, we have Avis, we have American Airlines, and all that stuff down here. And that was his point, because he said, if we are to see an upwards or downwards trend in the Dow Jones Industrial Index, it should be confirmed by the Dow Jones Transportation. And as we can see here, and that's why I'm bringing it up, because what we can actually see here is that the transportation index is down to this year. Oh, sorry, that was the wrong one. Is down this year by something like 7%. Whereas looking at the, we have it over here, Dow Jones Industrial Index, that is still a bit up. That is up something like, what, 2.3%. So what we should be looking out for, if the old Charles Dow was right, then that would be if the Dow Jones Industrial drops something like 1 or 2% more, making a new lower low here, meaning it is starting a trend down. If we're looking at the daily, if you have followed my writings and my videos, you will know that I would be looking for something like this, that it is actually a trend that is losing steam here, something like this. And if we start to break this bottom here, then we are starting definitely in a downwards trend. Now, normally you would see this one tip over and then the transportation index follow. But in this case, we have actually seen the larger stocks being pumped up by expectations of lower interest rates. And in the meantime, we have had the transportation index that have tipped over. The logic here, his rationale behind this was that it's okay that the big industrial stocks are rising, but they have to transport their goods. And if a trend either up or down should be confirmed, then it should be confirmed by the actual transportation companies. Because if the Dow Jones Index were just making a new higher high, but the transportation index were going down, he said, well, then it might just be some psychology, some pump in the market. But if the Dow Jones were going up and it was confirmed by the transportation index, it actually showed that it was a real financial, economical upturn in the overall stock market, because the industrial index were going up, but the transportation stocks were also going up and they were making money, and so the index were going up. So what we are seeing right now is a divergence. We are seeing that the transportation index and the Dow Jones Industrial are going each their way. Let's put it in another graph here. Here we're looking at the industrial index and the transportation index on a weekly chart, where the Dow Jones is the blue and the transportation is this brown yellow here. And what we can see is that they normally correlate quite well. However, of course, they're not completely 100% in sync, but a lot of the time they are really showing some good correlation. But what we can see right now is that the Dow, the normal industrial index, have been going up, whereas the transportation index is actually going down. And what I will be looking for here, and these are the really mega cap companies, that is if this low here is broken, because then we will have the Dow Jones Industrial and the Dow Jones Transportation in sync kind of again, but both going down. And that is something that I think we should be looking at. It could be kind of a sign that, if you saw my video the other week where I said I was a bit worried, I was a bit skeptical about this huge move up we have been seeing in the market, because it was basically fueled by the expectations of a lot of rate cuts this year. These rate cuts hasn't appeared. Fed is still very reluctant to cut the rates. That is, of course, their decision to make. But the stock market has made a decision saying, we think we're going to have 5 to 7 rate cuts this year. And that means their stocks have been pumped up. However, the transportation index are saying, well, there's not an awful lot of goods being transported. So therefore, at least that's a theory, that when this index goes down, it is because less and less goods is being transported. And when less goods are being transported, it means that the big industrial companies are actually not doing so great, at least not as the market here indicates. So there was a time just about around the .com crash where the theory, or the critics of the theory said, yeah, well, this correlation is dead now, because in the future everything will be online, it will be internet, so it doesn't matter if the transportation index and the Dow Jones Industrials are not correlating, because the big industrial companies, they're just selling goods over the internet. We don't need to transport all that stuff. But it turned out they were wrong. Of course, we need to transport real stuff. And right now, I am worried about this disconnect between the two. But let's see what happens. And if we want to, we can even put on the SPY, the S&P 500 here. And we can see that the move is even more crazy. Most of the time, it correlates with the two other indices here. But since October, November last year, the S&P 500 have just completely lost track of everything and has just run its course upwards, whereas transportation companies are suggesting that there might not be quite the upswing in the economy that the S&P 500 is suggesting. I hope this makes sense. As always, you can go into MyStockScanner and you can screen for different results. For instance, if you want to see which stocks are actually a member of the Dow Jones Industrial average here, then you can go in here in the screeners, you can make a new screener, you can add a rule as I've done here, and then I have chosen index member, press update, and then I have chosen it to be a member of the Dow Jones Industrial average. And here we can see the different constituents of this index here. And you can go in and evaluate each and every one of them and see what you think of them as companies. We can see that the quality score is fairly good for all of them. There is Goldman Sachs, but the quality score doesn't really count for financial institutions, so that doesn't tell us much. Then there's Intel and the Boeing company down here that is scoring quite low. Anyway, this is a way you can do it. You can go in here and analyze in all aspects, and you can put even more criteria up here to screen for, but that is something you can do. Also, if you might be considering shorting, and I should say I am not a shorter myself, but if you're saying that, for instance, these stocks need to come down because the transportation index is coming down, then you might want to find some weak stocks in these two indices and maybe use them along with the TPI indicator to show when a good downtrend is occurring. But that's just an idea. As I said, I am not really encouraging people to short stocks. It is very hard to do. I'm a much more long investor, buying and trading and swing trading, and not trading against the market. All right, I hope this made sense. Have a look at it yourself and take care of yourself and your money out there. I'll speak to you again shortly. Bye.